Hey, Bill Soriano from Pittsburgh, and it's about 7 p.m. here Eastern Time on Thursday, March 1st. So I posted my trades today on my page here and also in my group. The group is Forex Trading Authority. That is over here. Here's the group page right here, Forex Trading Authority. Like I said, I posted images in the group and on my page today. But anyway, here's my trades for today. And like yesterday, I started off with two bad trades. And during the Tokyo session last night, I decided to take this trade here with AUDCAD, and I lost 20 pips on that one. And then earlier today, I think it was about 8:30 in the morning, I decided to take the long position on EURNZD, and I'll show you that in a second here, but that didn't work out. I ended up getting stopped out with a, what is that, a 23 pip loss. But then I did, like I tell you guys, whenever you lose money like that, if you were just wrong and it goes a little bit lower than you expected, then you double up and you take it again to get your money back. And that's what I did here. I ended up getting 35 pips on this one to get me back to positive. This actually went up a lot more than 35 pips, which I'm going to show you here in a second. But I was happy with my 35 pips. Anyway, here's what we're looking at here. So, right about here, I opened up TradingView.com. I think it was about 8:30, if I'm not mistaken. Let me see here. It looks like it's about maybe 7:45 in the morning here. And I seen that EURNZD had made this nice move down, right? And I thought that it had bottomed out right here, okay? And then I seen a W forming here, and it was coming back at that point to retest this low, so I decided to go long. Okay, here's where I made my mistake though. I think that it just kept going lower, obviously. Now the average daily range on this was 108 pips at this point, okay, today. So if you take this from the top to the bottom here, it had moved just about 108 pips. So it moved an amount equal to the average daily range. However, what I'm finding is, though, you need to make sure that this drops slightly more than the average daily range, not just amount equal to it. Okay, so I took the trade on the retest of the low here, and I immediately got stopped out. It just dropped all the way down to here. So now I lose 23 pips or whatever, but now I know that this has to be the bottom, okay? So what I do is I'm watching this candle here, and it closes right here, and then this candle starts to move up. So when this candle got about halfway up, I decided to jump in, because I've noticed lately that when it's forming these railroad tracks at the bottom here after it makes the big move, that this candle goes up a lot, just like it did here. And then what happens is, once it goes up this much, then you don't know whether or not to get in, because you're worried it's going to retrace right away. So I got in again as this was moving up here about halfway, and my goal was to take this back to the water, which was about 50 pips. At some point, though, I decided to just take 35. I put a take profit in at 35, and I think I probably got taken out of the trade right around here. Right around this point here. It did go back to the water like I predicted. Not only did it go back to the water, it went back to the mayonnaise, and it just kept on going. So from the bottom, from this bottom here, all the way up to the top, okay? So here's the new average daily range down now. So from here to here, it moved down 146 pips, right? And then the counter trend trade moves 109 pips back up. Okay, so essentially it closes the day, right, just about where it opened. Okay, it's a little bit higher. You know, it opened right here. Well, no, let's see here. Actually, this is the first candle, so it would open right here, if I'm not mistaken, and it closes right about in the same place, right? Anyway, I was happy with my 35 pips. That got me back into profit for the day. Now, you might be wondering, if you looked on my page here, why did I post this image of this demo trade right here? And you know that my pet peeve are people that post all these big lot trades from their demo account, and they show them making all this money, and because they're trying to get people to sign up for whatever program they're in or whatever training they're promoting at the time. I myself right now, I'm not promoting any training. I'm just trying to trying to hone my skills here, learning how to do Forex, and trying to share the results that I'm coming up with everyone here on Facebook and in my group. So anyway, here's a 10 lot. So that same trade here, on this one, I end up getting 6 pips. But since it was a 10 lot trade, it was $463.17. Now, again, this is a demo trade. It doesn't mean anything. But the reason why I show it is because if you see here, I took this demo trade, okay? I took this demo trade, 10 lots, and I took my first trade here. If you see here, the first time I took the EN trade, it was at 68597. Okay, I took the demo trade right about that same time. Okay, now, had I put a stop loss in on this demo trade, like I did with my live trade, I would have gotten stopped out, right? I would have lost money. I would have lost 23 pips. I probably would have lost about $1,700 from my demo account. Okay, but you don't see that. The reason why you don't see that is because there was no reason for me to set a stop loss. I was using my demo account. I'm not using real money. So I just let it run. I just let it run, right? It dropped down to the bottom. I got back in here at 16823 on my live account, right? And made my 35 pips, $25 profit. And I just let the demo account run back to the same place and got out. Right? With a 6 pip gain, $463. But what I'm trying to show you is, had this been a live trade, I would have lost $1,700 on this trade today because I would have had to set a stop loss to protect myself. Not only that, I would have had to have a lot more money in my trading account, or else I would have got margined out at some point as well. So this is, I just post this demo trade here to show you that trading demo is not the same as trading on your live account. The psychology is not the same. Nothing is the same. And listen, I know there are some guys out there that use their demo accounts to test out trading strategies, and they do it strictly. They do it strict. They set stop losses. They set take profits just like they would if they were using their live account so that they can get an idea of if their strategy is working. That's fine. There's nothing wrong with that. I understand that. What I don't like is I don't like the people that are doing these demo trades like this, 10 lots, 20 lots, 30 lots. They're not putting a stop loss in. They're just waiting for it to turn around so that they can show a big amount of gain like this, $463.17 for the day, and they can make you think that they know what they're doing. When in actuality, this would have been a $1,700 loss had I been trading live, because I would have never let it run all the way down. Okay, I would have never put that much money at risk. So again, this was my trade on EURNZD. I waited for it to make its big move for the day. The big move was down, right? Started here during the Asian session, right? 4 o'clock. That's about what is that? 9 at night, 9 p.m. It started moving down right there. I took a long position right here, got run over, right? Did I run and cry? Did I go and hide? Did I go on vacation? No. I waited for it to bottom out, and then I doubled down and got back in and got my money back. Now, hey, sometimes you double down and you get burned again. You know, that could happen. It could go lower, you know, but you have to trust your strategy and what you're looking at on the chart, you know, and you obviously don't make that decision. Look at a couple things here. I mean, to me, this was a good decision to take this long here, right? It dropped down. Look at the TDI. TDI is below 32. It's a shark fin, right? Shark fin out of the water, right there. Does the same thing down here. See? But in this case, what happened is, here it had only dropped 108 pips, which is about what the average daily range is on it. But here, now it's dropped 148 pips. So now you can expect with a higher probability that if you get the right candles and you catch the bottom, that this is going to turn around and you could take the counter trend trade back to the water, which is the 50-day moving average. That's what we like to do. We like to shoot for that. But occasionally it does go back more. It goes back to the mayonnaise, and in this case, it just keeps on going. Okay, so Bill Sorana from Pittsburgh. Let's make it a great day trading Forex.